The U.S. dollar is a terribly flawed currency. I mean, the U.S. is the largest debtor in the history of the world. I'm not the only person who knows that. I'm not the only person who knows that that's going to cause problems someday. But today, silver is cheaper on a historic basis. Silver is down 60% from its all-time high or something. Gold is at an all-time high. So obviously, on a historic basis, silver is cheaper. I'm not buying either today, but if I were buying one today, I would buy
One of
silver.
the most attractive aspects of investing in silver is its affordability. Silver often trades at a fraction of the price of gold, making it accessible to a broader range of investors. As Jim Rogers has pointed out, gold has been a trusted store of value for centuries, offering protection against inflation and economic instability. However, for those who are just starting or have a smaller investment budget, silver provides a similar opportunity to enter the precious metals market without needing a large amount of capital. Moreover, the lower price point means you can buy more ounces of silver for the same amount of money compared to gold. As Rogers suggests, even though gold's stability makes it a solid investment, silver's more volatile nature can offer higher percentage gains if prices rise. This is because even small price movements in silver can result in significant returns on investment, making it an appealing choice for investors looking to maximize their potential gains in the precious metals sector.
I own some silver. I own some gold. I've been buying silver and gold for many years. I've never sold any. I give some away as gifts occasionally, but no. If I were buying one today, I would buy silver. Silver is still down 40% or so from its all-time high. Gold is making all-time highs. Who knows? I own both. I'm not selling either, and I hope I'm smart enough to buy more given
Jim
the right
Rogers has
opportunity.
long been a proponent of investing in precious metals, particularly gold and silver. He views these metals as essential assets in any well-diversified portfolio. According to Rogers, gold and silver serve as a hedge against economic uncertainty, inflation, and currency devaluation. He often highlights that, throughout history, these metals have retained their value even when paper currencies have failed. Rogers believes that both gold and silver offer unique investment opportunities. Gold, being a well-established store of value, is often seen as a safer investment. Silver, on the other hand, is more volatile but offers potential for higher returns due to its industrial applications and lower price point.
It's very easy for the Chinese to buy gold and silver. There's a gold shop everywhere you go, and you can buy more. The banks sell, or some of the banks sell gold and silver. It's very easy. I mean, the Chinese have been around a long time.
One of the key pieces of advice Jim Rogers offers is the importance of timing when investing in gold and silver. He cautions against buying these metals when prices are at their peak. Instead, Rogers advises waiting for corrections or downturns in the market. He believes that the best opportunities arise when these assets are undervalued, allowing investors to buy at a lower price and potentially profit when prices recover. Rogers often looks at macroeconomic trends, geopolitical events, and monetary policies to gauge when it might be a good time to buy precious metals. For instance, during times of economic crisis or when central banks are printing a lot of money, he sees gold and silver as particularly attractive investments. Jim Rogers is a strong advocate for diversification. He advises investors not to put all their eggs in one basket, even within the precious metals sector. While he sees great value in gold and silver, he also emphasizes the importance of having a diversified portfolio that includes other asset classes, such as stocks, bonds, and commodities. Rogers' philosophy is that diversification helps spread risk and can lead to more stable returns over time. For those investing in precious metals, this could mean holding both gold and silver, as well as considering other metals or commodities. Another crucial aspect of Jim Rogers' advice is maintaining a long-term perspective. He often stresses that investing in gold and silver should not be about quick profits. Instead, it's about preserving wealth and protecting against economic uncertainties. Rogers believes that these metals can serve as a form of insurance for your portfolio, providing stability when other investments might be more volatile. He encourages investors to be patient and not be swayed by short-term market fluctuations. According to Rogers, the key to successful investing in precious metals is to stay informed, Remain patient and be prepared to hold these assets for the long term.
2009 was bad, and this has been the longest period in American history without a major disaster. Maybe it's going to last 50 years. I don't know. It never has. Washington says, don't worry, everything is okay. Well, I know not to listen to Washington. But, Andrew, I have not started selling short. I do not sell short yet, but I can see there is euphoria building. I see that many people, new investors are coming and saying this is wonderful and it's easy. These are signs that you see near the end, but I am not selling short yet.
Jim Rogers has witnessed numerous market crashes throughout his career, and his perspective on these events is both insightful and practical. He believes that market crashes are inevitable and a natural part of economic cycles. According to Rogers, while market crashes can be frightening, they also present unique opportunities for savvy investors. Rogers emphasizes that during a market crash, emotions often run high, leading to panic selling and significant price drops. This can create buying opportunities for those who are prepared and able to keep a cool head. He often advises investors to stay calm and avoid making impulsive decisions driven by fear. One of Jim Rogers' key pieces of advice is to always be prepared for a market crash. He suggests having a portion of your portfolio in cash or cash-equivalent assets, so you have the liquidity to take advantage of buying opportunities when prices are low. Rogers believes that having cash on hand during a market downturn allows investors to buy high-quality assets at a significant discount. Additionally, Rogers recommends doing thorough research and identifying fundamentally strong companies or assets that you would like to own. By creating a watch list of such investments, you'll be ready to act quickly when the market provides an attractive entry point.
And you see people saying, oh my gosh, I've discovered this new thing. It's the stock market and it's easy and you can make money. Well, okay, it's not my first rodeo. I've heard these stories before. But Andrew, as I say, I'm not selling short yet because I don't see the wild euphoria that has happened in previous bull markets near the end. Maybe we're there. Maybe I'm not smart enough, but I'm still waiting.
So based on your experience going through several, market crashes and recessions, I think you're saying that there is a possibility that you don't feel that major euphoria that you felt in, let's say, the dot-com bubble or 2008, 2009, I guess.
It doesn't feel to me the same, as powerful and as out of control, as hysterical as it has been in the past. But who knows? Bull markets, they don't sit down and write a book and say, this is what happens at the end. I wish it were that easy. It's never been that easy for me.
Patience and discipline are crucial traits for investors, especially during a market crash. Jim Rogers emphasizes the importance of sticking to your investment strategy and not succumbing to panic. He advises investors to have a long-term perspective and to remember that markets eventually recover, even after severe downturns. Rogers also recommends reevaluating your investments periodically to ensure they still align with your financial goals and risk tolerance. By staying informed and disciplined, you can navigate market crashes more effectively and position yourself for future gains.
And bull markets have happened before. I hope they always happen. And I hope I'm smart enough to know when to get out and to sell short.
During a market crash, Jim Rogers advises looking for assets that are oversold and undervalued. This is often when fear has driven prices down far below their intrinsic value. Rogers suggests focusing on sectors or industries that are likely to recover and thrive in the long term. He also advocates for diversification, even during a market crash. By spreading your investments across various asset classes, you can mitigate risk and increase the potential for recovery as different sectors rebound at different times. Rogers often highlights precious metals, such as gold and silver, as safe haven assets that can provide stability during market turbulence.
Andrew, I've made many mistakes. We could have 2 or 3 or 10 shows about my mistakes. I hope everybody's made a lot of mistakes, and I hope I continue to make mistakes, because that's the only way I'm going to have any success. No, I don't like missing a move. I certainly don't like making mistakes, but I know it happens. But I think I've learned that if you've missed something, the answer is usually not to say, okay, I'll jump in now. I'll make up for it. That is historically, for me,
not been a good way to do it. The way that I have found is wait until I myself think, okay, I missed that one, now here's another one. Wait until you yourself think you're right. But everybody has to do it their own way, Andrew. I wish this were easy. I wish all we had to do was look at page 37 and get the answer. There is no page 37. There is no chapter 4. I wish there were.
Jim Rogers often emphasizes that making mistakes is an inevitable part of investing. No matter how experienced or knowledgeable you are, it's impossible to get every decision right. According to Rogers, the key is not to fear making mistakes but to embrace them as learning opportunities. He believes that every investor, regardless of their level of expertise, will face setbacks and challenges. What's important is how you respond to these mistakes and what you learn from them. By accepting that mistakes are a natural part of the investment journey, you can approach investing with a more resilient mindset. In conclusion, Jim Rogers offers invaluable wisdom on embracing mistakes in investing and using them as opportunities for growth. By learning from our errors and maintaining a growth mindset, we can become more resilient and successful investors. If you enjoyed this video and found it helpful, please give it a thumbs up, leave a comment with your thoughts, and don't forget to subscribe. For more insightful investing tips and strategies, hit the notification bell so you never miss an update. Also, if you're looking to invest in gold and want to work with a trusted and reputable company, we highly recommend Augusta Precious Metals. The link is in the description. Our recommended gold company are experts in the field and can help you make informed decisions about your precious metal investments. Check the link in the description to learn more and get started today. Thank you for watching, and we'll see you in the next video.